Hi, this is Joe Rabel with Invest Like a Pro. I thought we'd do something different this time. Everyone knows that Warren Buffett is one of the great investors of our time. He's done it as a fundamental analyst. I thought it would be real interesting to look at it as if he were a technical analyst and what would be his mentality and what type of rules would he use on that side of the equation. So I put together seven, you could call them rules, basically characteristics of being successful as a technical analyst. So let's get right into it. I think one of the most important ones, if not the most important one, if you're going to look at things like Warren Buffett, even as a technical analyst, is being bottom up. And what that means is, while you do recognize the importance of the overall market and what the market is doing and where it is situated in its long-term cycle, there's nothing more important than going and finding individual stocks that meet your criteria. That means you have to go through one stock at a time and look for patterns and specific characteristics that can provide really huge potential over the next year or two. So that's kind of the way I look at it when I'm going through and I'm looking for a longer term hold. And in fact, I saw Warren Buffett. He was interviewed on CNBC once, and he was saying that what most investors would be a lot more successful if they saw themselves, instead of buying a stock, as rather buying a piece of a business. And when you do it that way, and I think if your mentality is that way, you will be looking for specific characteristics. And if a stock meets those characteristics, then you're willing to look for specific entry points and say, you know what, I'm going to buy this regardless of where the market is. So I put together a few characteristics in this slide that I think, in terms of what I'm looking for from a bigger picture standpoint, from a technical standpoint, whereas Warren Buffett might be looking at the intrinsic value or whatever on the fundamental side, I'm looking for something that has a sideways line, number one. And a sideways line means something that has been moving sideways and sort of banging its head on a very key level, usually for several years, but even if it's been doing it for at least 1 year, and I have a couple of different tests of that level. The example I've got up here is the GLD of the gold index, and you notice back in two different times above this red horizontal line, once here and once here, both tested that level and couldn't get through it. Once that happened, I knew that was a very key point. And when it dropped down from there, I had a horizontal line drawn in and really an alert. And if it were to take out that level, I knew it would be very, very important. The other thing we want to see is number two here is a big base, meaning the longer you go sideways, the bigger your upside potential. It's kind of like the foundation of a building. The wider the foundation, the higher the stock can go when it eventually breaks out. I also like to look for price patterns. In this case, it's an ascending triangle. Sometimes it's just a regular old triangle, rectangular pattern. But a lot of times this ascending triangle pattern over a course of several years can be a very big launching pad for a stock. Also, if you look at the improving price structure, and what I mean by that is, if I were to do my 1, 2, 3 change in trend, I would have been drawing a downtrend line here, and then we've got a test of the low here, and then I would have put a horizontal line right at this same level. Meaning, if we would have taken this peak out on this move up here, you would have had a change in trend back to the upside. I actually think it's more bullish that it went sideways and built a bigger base before breaking through that level. But there is confirmation from a 1, 2, 3 change in trend on this break of this horizontal trend line. And it does, and then you add that along with the sideways line action, and it actually looks even more attractive. Low ADX means that this blue line stays below 25 for anywhere from 25 to 50 bars, no matter what the time. This pattern, although I'm looking at it on a monthly chart, could take place on an hourly. I've seen this happen on an hourly where you get a low ADX like this and it goes sideways and forms a sideways line. And if it's doing it on an hourly chart, you can do the same approach on a shorter term basis. The actual time frame doesn't really matter. I'm giving you something that I think can be applied to all time frames. Low volatility is a little bit different. In other words, this blue line going sideways like this for this length of time is telling me that low volatility means you're not getting a lot of huge price movement, and the size of the bars are not that big. If you look at the size of these bars, these individual bars, and compare them to, say, like the size of these bars here, that is telling me that you have a low volatility situation. The other thing that I notice in a when you have low volatility is that this blue line won't be ratcheting up and down. Because you can have low ADX and high volatility. You have to be very careful. If you're underneath the 25 line and the blue line is ratcheting up and down, you don't really have low volatility. The other thing I like to see is the 18-month line holding. If you notice, this line here is the 18-month, and you were below it through this whole period, then you rallied up and you couldn't hold it on this pullback. You rallied up, couldn't hold it on this pullback, and then you finally rallied up and held it on this pullback. I think that's a really good bullish sign, something to be on the lookout for. And then lastly is compression. If you can see signs where the difference between the high and the low is very, very small. I mean, this actually doesn't have compression because the swings are a little bit bigger than I would like to see. If you have something that doesn't, I actually did a video on this already, but if you have something where there's a significant amount of overlap and you're moving sideways right underneath the sideways line, the potential for more of a more explosive move, I think, is actually a little bit more powerful. Let's move on to the next slide here. This only point I want to make here is that this is the overall market, and let's say this is the overall market. You're going to do a lot better when the market is cycling to the upside in this stage 2 uptrend, finding these individual names, than you will, say, during this red period where you're in a stage 4 decline. So I'm not trying to totally dismiss the market. It's important to know where you are in the overall trend. You're going to make a lot more money buying these individual stocks from a bottom-up standpoint when the market's in an uptrend versus when it's in a downtrend. But I think you need to start from a standpoint of being bottom-up to come to this conclusion. The other thing I think you ought to be looking for is looking for independent movers. If a stock, you're not typically going to find stocks that are in the top, say, 50, Apple, Microsoft, JP Morgan. I mean, these types of stocks are more market stocks. They're going to move up and down with the market. You're not going to have a lot of these patterns doing their own thing. And that's really what I'm looking for. I'm looking for a stock that is sort of going based on its own merit. It's using, its own business might be showing signs of improvement, and all of a sudden it's showing some relative improvement. When the market pulls back, it doesn't pull back with it. There'll be subtle signs that'll show up if you're keeping an eye on a number of names. But the bottom line here is you're looking for something that can go up regardless of what the market's doing. If the market's flat and the stock can go up, I think that's a home run. So the other thing I wanted to mention here is that a lot of times it'll take place as a part of a group move. So there might be 4 or 5 names in the same sector or in the same industry group that are starting to show signs of relative improvement, or they're forming this sideways line. This is Sienna Corp. It went sideways, it banged up in here, banged up in here, and I started watching this thing for probably a year before actually buying it, just because I could see that it was building something that looked pretty important. So I think those are very key, and I think you have to go a little bit deeper than the top names in the market to find them. If you're only looking at the top 25 stocks, you're not going to really uncover an independent mover most of the time. You got to dig a little deeper into the S&P 500 or the Russell 1000, go a little bit deeper into that list, and you could even look at some of the Russell names in the 2000, where small mid-cap names, as long as they're high enough quality. The only way to really find names is to do your work. You have to go through a number of stocks on a regular basis. And for me, I'm looking at probably, thousands of charts every week. and I go through and I actually use TC2000 for this approach. I've got a chart here. This is a specific stock, and what I've done is I've got a monthly chart here in this box, and this is a weekly, this is a daily, and this is an hourly. And I will literally space bar, and the next stock will come up, and these 4 charts will show up for the next stock. So I'm looking at 4 different time frames at the same time. I've got the same 18 and 40 moving average lines on there, and I've got an ADX with the DI lines along with it as well on all 4 time frames. And I will browse through very, very quickly looking for specific criteria. I'm looking for that sideways line, and if you can identify the sideways line, write it down, and then put together a list of names for yourself. And I think if you do that, you and start to put alarms in when a stock is breaking that level, or just look at them every day, I think you're going to put yourself in play looking for names that I think have much more potential. Number 4 is the long-term potential, and I use multiple time frames for this criteria. And so instead of the 4 grid where I had 4 stocks up, I'm just showing you 2, because I think these are the 2 most important: the monthly on the left and the weekly on the right. And I believe if you focus your time really browsing through and looking for stocks that are building big bases on the monthly and the weekly, even if you're only looking to do like a swing trade or something that lasts a couple weeks or a couple months, you're still going to be better served finding stocks that are unwinding after being through a long sideways period and are starting to show a move. This is actually a gold stock that had been going sideways for years, literally years, and all of a sudden, look at where the ADX starts to kick in, and all this starts to unwind. Once you see that, you can look for my book, Invest Like a Pro. I go into a lot of detail on how to enter stocks like this that have started to emerge and start to pull back. And I give you several different ways of taking advantage of that. So again, I think if you're trying to find individual stocks from a bottom-up basis, you want to start with this monthly and weekly combination when you're browsing through and looking at stocks. The other thing is that, so I'm going to go back to this Sienna chart, and there's 2 really important things about having patience. Number 5, I watched this for a very, very long time, and then if you notice what happened here in 2019, it rallied up to this same level again, and then it formed actually one of my pinch plays on a monthly chart. And so the MACD crossed over and formed a little hold, and this line, and when this line crossed over, my partner and I bought this, and I think this is really sort of an interesting situation, because it had been a laggard. It really hadn't been performing very well versus the rest of the market. But I had noticed, just by doing my work every single night and going through the names, the same list of names every single night, that this stock was starting to show some resilience. Every time the market dropped off, it seemed like it was holding up a little bit better. And then we got this pattern to develop. So having the patience to wait and wait and wait and not sit in, you could have bought this any time in this period and been sitting and waiting for years. But by waiting for the absolute perfect time to strike, you start to see upside movement right away. The second part of this sequence is you have to have some type of a profit-taking strategy that will allow you to reduce risk. As the market moves in your favor, you're going to reduce risk. And as Mark Douglas would say from his book, Trading in the Zone, you're going to pay yourself as profits become available to you. And that means I would have a strategy where as a stock moves up, you've got specific money management points or price points based on price resistance where you're taking targets along the way and you're reducing your risk and you're putting money in your pocket. And then you can raise the trailing stop on the remainder of the position so that you can continue to capture upside gains. I would typically recommend, piecing it out by thirds or by quarters. But whatever methodology you use, it needs to be consistent. The other point I think I want to make here is you can't be, if you're going to try and make a big move in a stock and you want to buy something that's going to work for you, let's say for a year, you can't be overly consumed with every single tick that the market makes. If the market's dropping down, you can't say, oh, I got to get out because I don't want to get hit by the market causing my stock to go down. Or on the other side of the equation, it's your own stock. If your own stock is fluctuating because you've got something like a Sienna, which is a very volatile name, and it might move 4 or 5% in different directions on a regular basis. You can't be getting sucked out of those stocks, or you'll never catch big moves doing that. I want to make a really key point. So the left side here is the S&P 500 chart. On the right side is the Sienna. This big vertical bar, I actually moved the line a little bit to the right of it so you could see. This big bar was where we bought this, somewhere around 29.30. Now, this vertical bar and this vertical bar are the same time, at the same point in time, okay? And we literally bought Sienna breaking out of that base where we had waited for a very long time, right before the market, this is in 2018, went through a 20% drop. Okay. Now, if I'm focused on the market and the way the market's dropping and the way it's breaking its trend and violently turning down, there is absolutely no way that I can hold on to this stock. I would be selling this thing on the first drop, any type of decline. I would be saying, the market looks terrible, I'm getting out. You have to look at each stock individually and you have to follow your plan. And in this case, if I would have done that, even though the market dropped 20%, we actually saw a 50% move. This stock went from 28, 29, 30 up to $45. And we were able to take several targets actually along the way. So you need to really focus and look at each stock and manage them individually. I don't think I've ever heard Warren Buffett say that. He might say that he doesn't like the market, so he's not buying because he thinks it's too expensive. But I've never heard him say, I'm getting out of a stock because I think the market's going down. And I think if you make a plan for each investment and you have the discipline to follow it, your chances of success are going to increase dramatically. So I think if you go through and look at these rules again, I think a lot of these meet the criteria of what Warren Buffett would say if he were a pure technical analyst. And as far as I know, I don't think he's ever looked at a chart in his life. I'm not sure, but I know he's a pure fundamentalist. But if you're on the technical side of things, I think if you think in the same manner that he's thinking, I think you can be very successful. So hit like if you like the video. Also, if you subscribe, make sure you hit the bell to make sure you get any type of notifications. We'll talk to you soon.